Is the crypto bull market finally over? After years of explosive growth, million-dollar gains, and mainstream adoption, something feels off. Prices are stalling, major exchanges are under fire, and even government intervention isn't having the expected impact. Some experts say this is just a bump in the road, but others warn that we're on the edge of a major collapse. So, what's really going on? Is this just another crypto dip before the next surge? Or are we witnessing the beginning of the end? Let's break it all down, because the truth might surprise you. Just a few years ago, cryptocurrency was dismissed as a passing trend, something only tech geeks and risk takers dabbled in. But then, things changed. Fast. Bitcoin, Ethereum, and countless altcoins skyrocketed, turning everyday investors into overnight millionaires. Institutions that once called crypto a scam suddenly jumped in, with hedge funds and billionaires piling into the space. But what exactly caused this surge? For starters, mainstream adoption exploded. Companies like Tesla, PayPal, and even major banks started accepting or investing in crypto, legitimizing it in the eyes of the public. Then came the massive retail investor wave. People who saw others making life-changing money and didn't want to miss out. And let's not forget the technology itself. Blockchain advancements, DeFi, and NFTs introduced new ways for people to engage with digital assets beyond just holding coins. With all these factors fueling the bull market, it seemed like crypto was unstoppable. But as history has shown, when things go up too fast, there's always a catch. And in this case, the warning signs were already starting to show. Just when crypto seemed unstoppable, the US government threw a curveball. In a shocking move, former President Donald Trump announced the creation of a US crypto reserve, a mysterious initiative that instantly sent shockwaves through the market. On the surface, it sounded like a step toward mass adoption. A government-backed crypto reserve? That should be bullish, right? But the details, or rather the lack of them, raised serious concerns. The announcement was vague, leaving investors wondering which cryptocurrencies would be included and who would benefit the most. Would this favor specific coins like XRP, Solana, or Cardano, while leaving others out in the cold? Skepticism quickly spread. Some saw it as a power play, an attempt to control the crypto space rather than support it. Others questioned if this was just political grandstanding, using crypto as a tool to gain voter support. Meanwhile, regulatory uncertainty continued to loom, with no clear framework on how this so-called reserve would actually function. Instead of boosting confidence, Trump's announcement left investors uneasy. And when you combine government unpredictability with the chaos already happening in major exchanges, things start looking even more dangerous. While investors were still trying to process the government's crypto power moves, another crisis was unfolding. This time in the very platforms people use to trade their digital assets. For years, Binance was the king of crypto exchanges, handling billions in transactions daily. But in a stunning turn of events, the company found itself under fire from US regulators. Both the Commodity Futures Trading Commission, CFTC, and the Securities and Exchange Commission, SEC, hit Binance with lawsuits, accusing it of everything from market manipulation to illegal trading practices. And then came the real shocker. Binance CEO Changpeng Zhao, one of the most influential figures in crypto, stepped down and pleaded guilty to federal charges. Just like that, the most powerful exchange in the world was thrown into uncertainty. But Binance wasn't the only one in trouble. Other exchanges like Coinbase and Kraken also found themselves in legal battles, facing accusations of operating without proper regulation. The result? Investors started pulling their money out, fearing a collapse similar to the FTX disaster. Confidence in centralized exchanges was crumbling. And if people didn't trust the platforms, how could they trust the market? But the damage wasn't just coming from lawsuits. Scandals and security breaches were about to make things even worse.
Do you want to learn how to get familiar with crypto? You've heard about them before, but you've never considered having a real approach to them. Give me 30 seconds to convince you. Deposit $100 and get up to 50 USD in rewards. Verify your account, deposit, and start trading to maximize your bonuses. Are you still insecure? At Bybit, the more you deposit, the more you earn. With your first deposit and trade of just $500, you can get an instant $50 bonus. And if after all this I still haven't convinced you, I suggest you try the app. Because Bybit is not just an application, but a reality.
If the legal battles weren't enough, the crypto world was also rocked by a series of scandals and security breaches, shattering what little trust investors had left. First, there was the fall of Sam Bankman-Fried, the once celebrated CEO of FTX. Just a year before, FTX was one of the biggest crypto exchanges in the world, attracting celebrities and institutional investors alike. But behind the scenes, things weren't as they seemed. When it was exposed that FTX had been secretly misusing customer funds, the entire empire collapsed almost overnight. Billions of dollars vanished, and investors were left with nothing. Bankman-Fried was arrested, put on trial, and eventually convicted on multiple fraud charges. But by the time justice was served, the damage was already done. Trust in crypto exchanges had been shattered. Then, as if the market needed another hit, the 2024 WazirX hack sent shockwaves through the industry. The India-based exchange, once considered a rising star in crypto trading, was hacked for a staggering $235 million. Investors who thought their assets were safe woke up to find their accounts drained, with little hope of recovering their money. These back-to-back disasters left one thing clear. Crypto wasn't just risky, it was dangerous. And if even the biggest names in the industry weren't safe, how could everyday investors hope to protect themselves? With trust eroding fast, the market was teetering on the edge. But the real question was, would investors stick around, or was this the beginning of a mass exit? With lawsuits, scandals, and security breaches piling up, you'd think the crypto market would have completely collapsed by now. But oddly enough, Bitcoin and other major cryptocurrencies haven't crashed yet. Instead, prices have been stagnating, moving sideways despite major headlines that should have sent the market spiraling. At first glance, this might seem like a sign of resilience, but in reality, it could be something far worse: investor exhaustion. For years, crypto thrived on hype. Bull runs were fueled by waves of new investors hoping to strike it rich. But now, many of those same investors are hesitant, skeptical, and even fearful. They've seen too many scams, too many hacks, and too many legal battles to blindly trust the market again. Even Bitcoin, the so-called digital gold, hasn't been spared. While institutional investors are still holding on to their positions, retail investors, the ones who drive the most extreme price movements, are less eager to jump back in. After all, what's the point of buying in if the next exchange collapse or regulatory crackdown could wipe out their gains overnight? The market isn't crashing, but it's not surging either. It's stuck in limbo. And when a bull run loses its momentum, it raises a bigger question. Is this just a temporary cooldown, or the start of something far worse? Because what happens next could determine the fate of the entire crypto market. So, is this really the end of the crypto bull market? The signs aren't looking good. Major exchanges are under fire. High-profile scandals have shattered trust, and investors are more cautious than ever. Even with government-backed initiatives and institutional involvement, the hype that once fueled massive rallies seems to be fading. But here's the thing, crypto has been here before. Every time the market looks like it's on the brink of collapse, it somehow finds a way to bounce back. The question is, will this time be different? Some believe regulation and transparency could bring a new era of stability, while others think crypto's original appeal, decentralization and freedom from government control, is slowly being stripped away. One thing's for sure, the days of easy, mind-blowing gains might be over. The crypto market is evolving, and only time will tell if it's heading toward a new, mature phase, or if the wild bull runs that made millionaires overnight are truly a thing of the past. What do you think? Is this just another cycle, or is the crypto dream finally coming to an end? Let us know in the comments below.
If you haven't already done so, visit our website. You will find the link in the description.